Hey there, welcome back to my channel, it's me the Mind Injector. Today, we're diving deep into one of the most talked about phenomena in the stock market, GameStop. If you've been following financial news, you know GameStop has been at the heart of the meme stock craze. But what's really going on with this company? Is GameStop a smart investment or a ticking time bomb? Stick around because we're going to break it all down for you. Alright, let's kick things off by addressing the elephant in the room, the meme stock craze. GameStop has been at the heart of this phenomenon, driven by a whirlwind of retail traders and social media hype. But here's the deal. Many traders are jumping on the bandwagon without doing their due diligence. This can be incredibly risky and potentially lead to financial ruin. So today, we're sending a warning signal and giving GameStop stock a closer look. You've probably heard about the infamous short squeeze involving GameStop some time ago, spearheaded by users on Reddit's Wall Street Bets. This event skyrocketed the stock price, leaving many retail investors with a thrilling but volatile ride. Recently, another short squeeze was triggered after a popular Reddit user and meme stock trader resurfaced on social media. The result? GameStop stock experienced another pump and dump. And if you're not careful, you could be the one left standing when the music stops in this risky game of musical chairs. Let's talk about GameStop's recent capital raise. On May 17th, GameStop stock plummeted 26% after the company announced plans to raise capital by selling 45 million shares. Investors were understandably concerned about share value dilution. As Paul Nolte said, "From a corporate perspective, it makes a ton of sense, but it throws some cold water on the recent rally, because now you're diluting the existing shareholders." Fast forward to May 24th, and GameStop completed this share sale, raising approximately $933.4 million. While this influx of capital might seem like good news, it doesn't eliminate the underlying issue of potential future dilution. The company might need to raise capital again, keeping the dilution concerns very much alive. Now, let's dive into the fundamentals of GameStop. Despite the hype, the financials paint a different picture. GameStop's preliminary results for the first fiscal quarter, which ended on May 4, 2024, indicate net sales of $872 million to $892 million, a steep drop from $1.237 billion in the year earlier quarter. Additionally, GameStop expects a quarterly net earnings loss of $27 million to $37 million. While this is an improvement over the net loss of $50.5 million in the previous year, it's still a loss. Moreover, GameStop's cash reserves are dwindling. The company expects to have ended the quarter with cash equivalents and marketable securities of $1.073 billion to $1.093 billion. Down from $1.31 billion at the end of the year earlier quarter. This decline underscores why GameStop felt the need to raise capital. Participating in a high-volume meme stock rally can be exhilarating, but it's also fraught with risks. The recent rise in GameStop shares, fueled by the return of Keith Gill aka Roaring Kitty on social media, saw a quick spike followed by an equally swift decline. This pattern is a stark reminder that meme stocks can be incredibly volatile. The brief surge in GameStop stock led to a 20% increase, but it soon fizzled out, leaving many investors disappointed. Meme stocks, by their nature, are unpredictable and driven more by social media sentiment than by fundamentals. Gill's cryptic return to social media momentarily reignited beliefs in the meme stock craze, causing GameStop stock to jump nearly 200% in 2 days. However, the rally quickly peaked and GameStop stock fell 54%. Returning to its previous trading levels. This volatility highlights the risks associated with investing based on hype rather than solid financial analysis. Beyond the meme stock frenzy, GameStop's core financials remain concerning. The company has struggled to transition successfully to online sales, resulting in ongoing financial difficulties. In late March, GameStop reported weak financials results for the final quarter of 2023. With earnings of 22 cents per share on revenue of $1.79 billion, falling short of Wall Street's expectations of 30 cents per share on sales of $2.05 billion. Hardware and accessory sales fell 12% year over year to $1.09 billion, while software sales declined 31% to $465 million. This decline in sales highlights the challenges GameStop faces in adapting to the changing retail landscape where digital game downloads are becoming the norm. In addition to poor earnings, GameStop's new strategy of having CEO Ryan Cohen invest the company's excess cash in stocks and other securities, including crypto, has been heavily criticized by analysts. This move is seen as risky and could potentially worsen the company's financial situation. So, what does the future hold for GameStop? While the company's attempts to innovate and stay relevant are noteworthy, the financial realities suggest caution. GameStop's reliance on capital raises to stay afloat and its ongoing financial losses indicate that the company has significant hurdles to overcome. For those considering an investment in GameStop, it's crucial to weigh the potential rewards against the inherent risks. The company's efforts to raise capital and transition to new business models are steps in the right direction, but they may not be enough to ensure long-term viability. Investors should carefully analyze GameStop's financial health, competitive landscape, and market trends before making any decisions. While the allure of quick gains from meme stock rallies is tempting, a more measured and informed approach is essential to avoid potential pitfalls. The GameStop saga also serves as a fascinating case study in market psychology. The meme stock phenomenon highlights how social media and online communities can dramatically influence stock prices, often leading to sharp short-term movements that defy traditional financial analysis. This power of collective action can create opportunities for savvy traders but also poses significant risks for those who jump in without fully understanding the dynamics at play. Social media platforms like Reddit, Twitter, and YouTube have become powerful tools for retail investors. They provide a space for individuals to share ideas, strategies, and market insights. However, this democratization of information also means that misinformation and hype can spread rapidly. The GameStop short squeeze is a prime example of how collective action can drive a stock's price to extreme levels, detached from its fundamental value. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up now using the link in the description and get those free stocks. Now, let's get back to the video. Investing in meme stocks like GameStop requires a thorough understanding of the risks involved. These stocks can be highly volatile, with prices driven more by sentiment than by underlying financial health. While some investors have made significant profits from meme stocks, others have faced substantial losses. It's crucial to approach these investments with caution, conducting thorough research and being prepared for rapid price swings. The GameStop saga offers several important lessons for investors. First and foremost, it underscores the importance of doing your homework. Before investing in any stock, especially one that's part of a meme trend, it's essential to understand the company's fundamentals and the broader market context. Relying solely on social media buzz can be a recipe for disaster. Secondly, the GameStop episode highlights the need for a long-term investment strategy. While short-term trading can yield quick profits, it also comes with significant risks. A diversified, long-term approach to investing is generally more sustainable and less prone to the whims of market sentiment. One of the key principles of sound investing is diversification. By spreading your investments across different asset classes and sectors, you can reduce your risk and increase your chances of achieving stable long-term returns. The volatility of meme stocks like GameStop highlights the dangers of putting all your eggs in one basket. Diversifying your portfolio can help mitigate these risks and provide a more balanced approach to investing. While GameStop has captured the public's imagination as a symbol of the meme stock movement, it's important to remember that it's just one company in a much larger market. The broader trends in the gaming industry, retail sector, and economy as a whole will ultimately have a more significant impact on your investment portfolio. Keeping an eye on these broader trends can help you make more informed investment decisions. In conclusion, The story of GameStop is a compelling example of the power of social media and collective action in the stock market. It serves as a reminder of the importance of doing your research, understanding the risks, and maintaining a diversified investment strategy. While the allure of quick gains from meme stocks is strong, a more measured and informed approach is essential for long-term investment success. So, if you're considering jumping on the GameStop bandwagon, take a moment to think critically about your investment strategy. Make sure you're making decisions based on solid financial analysis rather than hype. And remember, the key to successful investing is not just finding the next big thing, but building a portfolio that can withstand the ups and downs of the market. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.